Let's get some pointers on what's coming in commodities ahead. Often commodities are seen as a decent hedge against inflation, and there are fears that in the United States at least, prices are still rising. Let's bring in Kriskey, commodities and digital assets ETF strategist at Invesco. Kathy, thanks very much indeed for coming on. Is that still true in an inflationary environment? Commodities tend to act as a decent hedge?
Yeah, thanks, Andrew. And yes, absolutely. Commodities have proven, broad-based commodities specifically, are the most efficient hedge for inflation because you only need a small amount, like 5%, to hedge your inflation risk. And there's so much going on right now that potentially could be inflationary. Some of the things you just mentioned, actually, so the sanctions, the tariffs, some of the geopolitics, right? So even though I know that there's been a lot of bearish sentiment around commodities, like towards the end of last year, we see that there's a lot on the horizon for 2025 that could be, inflationary.
What themes are you looking out for? Let's start off with tariffs. And now I know we just don't know what Mr. T is going to do when he comes in a few days' time. But what general pointers would you have for commodities when it comes to U.S. tariffs?
Right. So when you think about tariffs are basically a tax on the global economy, right? And thereby inflationary. And so we are concerned about actually all of the commodities, but this situation's very fluid, right? It keeps changing. Actually, the most recent one we heard this morning was that the tariffs are going to be imposed gradually, and Trump is going to use his Emergency Economic Powers Act. But the goal there, if it's done gradually, is to avoid this spike in inflation. Because remember, a lot of what he says is about day one. And if it is day one, then we could see a spike in inflation. So how will they affect commodities? We look at, it will affect every sector: energy, metals, and agriculture. So with energy, think about China is the biggest buyer of energy, biggest buyer of crude globally, right? So as a producer of crude oil, the U.S. will be harmed, right? If China, because of the because of the tariffs, will be have slower, softer growth on energy. But also just with Canada too, the tariffs in Canada, we are a massive importer of your crude, right? And so that could hurt U.S. refiners. So again, energy, big issue. And metals, though, is the most interesting one, I think, because that's already been reflected in prices. Prices are down for copper, aluminum, the industrial metals, because of the risk of tariffs. But it's been exaggerated. So we believe that we import from Canada, Mexico, and China, and we're already seeing changes, right? That China has basically said that they are increasing the cost for their producers to export metals, so thereby trying to deal with the trade imbalance. So we don't think it's going to be as bad for industrial metals, but the agriculture sector, that's where retribution is going to be key. So we look to what happened last time. So where do we import our agriculture from? Where do we export our U.S. grains? Is Canada, Mexico, and China. So the three places where they're going to have those big tariffs. So the tariff on China, potentially 60%, in Mexico and Canada, potentially 25%, and 10 to 20% on all other imports. So if we are putting tariffs on people that are importing our grains, the retaliation could be brutal. And that's what happened last time. The U.S. lost market share to South America. We just looked today to see where it was based on 2016 to now in terms of how much the grains that China buys. And we're basically just back to flat now from 2016. We're still lower from on soybeans. But again, this is losing market share for U.S. farmers, the people that helped vote Trump into office. So we think, again, this is potentially bad for a lot of commodities, but again, exaggerated. Remember, the prices that we see now are reflecting the views of the market. So a lot of this concern about the tariffs is already priced into some of these commodities.
Right, because if America's cereal exports are affected, it would tend to push down domestic prices of U.S. grains. Because they're right. Yeah, but you think that's already happened in some measure anyway?
We think some of it is reflected. Actually, to be fair with the grains, one weather event would change everything. And so that's why I said, even though we think tariffs could be impactful, dramatic weather in the U.S. or South America would totally dwarf that story.
Just give us that metals thing again. So the U.S. gets its copper, well, from lots of sources. Latin America gets a bit from Canada. So if the U.S., right. So you reckon the metals prices have already adjusted? Can you just give us your thesis there again? Sorry.
No, so they have, yes. So the metals prices have come down substantially because of the fear of tariffs and what their impact could be. Because we are a huge importer of metals. So this is one of the big problems, right? So we have, again, we import from, in order, Canada, Mexico, and China, right? And as I said, China, what they've done, they have this export tax, and they canceled the rebate on that. So basically, producers inside China are now paying more to export to places like the U.S. And it's hurting their own producers. But the goal, we think, was because they wanted to work on that trade imbalance that we have, with China. So we think that, using tariffs as a negotiating tool, which is ultimately Trump's plan, we think that that could work with certain countries, but we have to be careful. As I said, it's a tax on the global economy, which is inflationary. And as I said, commodities tend to be the best hedge for inflation. So we have that double thing we have to worry about is like tariffs could hurt commodities, yet if the tariffs cause inflation, you want commodities to hedge that. So as I said, we think that the prices right now are reflecting that, but again, we'll have to wait and see. Does he do a gradual implementation of these tariffs, or is it day one, he throws on all these tariffs just to scare people, right? And what will happen, obviously, are trade wars. So we are concerned about that.